Hey guys, it's Nick, and I'm going to talk about the Tesla earnings. They had a slight pop after hours, but then they dropped down to as low as 7.15 and trading around 7.20 or something like that. And I want to show what the earnings are and kind of take a look to see that people are kind of losing interest in the Tesla story, it seems. In this Zero Hedge article, they say that the 30-day positive correlation in the S&P 500 with Tesla stock has fallen from almost 0.8 down to now 0.44. So when Tesla moves, it doesn't move the S&P 500 as much compared to, say, Microsoft at 0.77, Apple 0.72, Amazon 0.66, and Alphabet 0.65. And even Caterpillar, which reports this week, is higher than Tesla at 0.51. So here's the headlines. I mean, supposedly they beat their estimate of 80 cents. They did 93 cents of earnings per share. Their revenue just slightly missed 10.389 billion versus 10.42, not a big deal. Cash flow 293 million, beating a cash burn of 82 million. And their automotive gross margin is 26.5, beating estimated 24.3, which is good. And they have 17 billion in cash, so that's awesome. But again, and a lot of people keep bringing this up, is that their regulatory credits that they get for selling EV credits to car companies that don't have EVs, and so they buy these credits so they don't have to pay a fine to the government. So these are basically made up out of thin air. And that accounted for 518 million of their income from operations. And that's up from 401 million in the fourth quarter of 2020. Yeah, they're selling cars, but their profits are coming from selling EV credits. And speaking of selling things that are made up out of thin air, they also made $101 million in profits from the sale of Bitcoins. So here's their profit here, 101 million. And so they sold about 272 million out of their Bitcoin holdings, and now they have only 1.3 billion left. So they sold about a fifth of their holdings. And here in the article, they say that although everybody assumes that all of their cryptocurrency is Bitcoin, it's unclear how much of Tesla's quotation digital assets, net was Dogecoin. So do they actually own any Dogecoin in Tesla? That's a good question. I don't know the answer to that. Probably not, or if it is, it's probably very small. But if you want a good visual on what these selling of the EV credits does for their earnings, take a look at Tesla's GAAP net income minus automotive regulatory credits. So except for these 2 quarters in 2018 where they had some GAAP net income, if you take away the regulatory credits, every quarter after that, they've been losing money basically. And so this article in Fortune says the wheels are churning, the pebbles are flying, but Tesla is going nowhere. And they say Tesla's not showing nearly rapid enough gains in the top line growth or profitability needed to fulfill the Tesla story. The best evidence is its pre-tax profits, excluding regulatory credits. As Musk has acknowledged, those benefits, most now coming from Europe, will quickly fade and won't be a significant contributor to earnings in the years or even quarters ahead. So for their first quarter, their profits were 533 million, but if you take away the tax credits, which are going to be going away soon, they will have earned just 15 million. And so they say the trend is not encouraging because Tesla earned a lot more in the third quarter of last year than the most recent quarter, 158 million versus 15 million. They say, put simply, Tesla is making close to nothing on a standard GAAP basis in its basic business. But yet, so far, people are still willing to pay $717 billion for a company that's making, $15 million in profits in a quarter and a whopping 1153 PE ratio, which means if you're buying this stock, you're basically saying, I'm willing to pay $1,153 for $1 a year in earnings. And so it will take you 1,153 years to get your money back just from the earnings. But if they grow their earnings by 10 times, let's say, then you only have to wait, 110 years. So, there's that. But of course, it's not all bad news, because some of these headlines spin it that, they beat on their earnings per share. And so they're trying to make it look good. And there's even some really good news for Elon, because he qualifies for $11 billion options payout. So Tesla's quarterly report hit targets, qualifying Musk for 2 options payouts worth a combined $11 billion, which is nice, because since they had, $10.3 billion in sales, all they have to do is maybe add another $1 billion to that to pay out Musk. Basically, every dollar that they sold in this quarter is going to pay out Elon Musk's options payouts, basically. So guys, I think the shine is coming off of Tesla, the people that piled into it before. Tesla's not going up like it was in the last year or two or whatever. And so people want that quick money, and they're getting more excited by the GameStops, the meme stocks, Bitcoin, even Dogecoin for that matter. So when a stock is on the up and up and everybody's interested in it, it could do no wrong. So even if it has bad earnings, it still goes up. We might be at a turning point with Tesla here, where even when they supposedly have, earnings that beat the estimates on the street, the stock goes down because maybe people are starting to say, hey, this thing is not moving anymore. It has a high PE. I may just, cash my chips, especially with this Biden capital gains tax thing coming, and move on to the next thing that, might be the next big moving stock. But right now, it doesn't seem to be Tesla. So that's my look at the earnings, and showing you that most of it came from basically selling EV credits and selling Bitcoin. So they're selling imaginary things for a company that's supposed to be an actual manufacturer of cars. Hope you like this one, guys. I'll see you in the next one. Thanks for watching.